Hi, Bruce. Hi, everybody. Welcome to this new session about tax refunds for startups. It's very exciting. We are waiting for a couple more people to join us for this roundtable, right, Bruce? But if you are ready, I'd be more than happy to start with you. We have some people already in the session waiting. Please, I'm just going to remind everybody that you can chat with us in the chat box, which is on the right-hand side of your screen, in the session that's dedicated to this session you're watching right now. The event one is for the general event. So if you do have questions, do let us know, and I'll make sure that we ask the questions to our guests and panelists and experts here who are here to give you their 2 cents about this,
This is terrific.
yeah, absolutely, and their expertise. All right, so Bruce, yeah, you've got the floor if you want to take it
Mark,
from there.
thanks. No, welcome everybody. I appreciate it. This is a terrific topic, very prevalent in today's economy. Believe it or not, a lot of companies, a lot of people are not aware of payroll tax incentives, credits, the R&D credit for major corporations. It's a huge benefit, especially for startups. Before we go into that, a little bit about my background, a little bit about FI Group. I'm the managing director for the United States for FI. What we do is we do tax incentives for corporations. Okay, I have a background of business operations for many years, longer than I like to admit. What I do is I help, I create relationships and trust with our clients, and we get tax minimization for them. Our clients are startups, they're manufacturers, or software developers, any company that has technology, innovation, I want to talk to. I could help you. I work with a lot of CPAs, attorneys, financial professionals, and we team up. It's very transparent. We develop technology that's second to none in the industry. My team consists of tax people, CPAs, attorneys, scientists, engineers. So they're all understand business operations, and so how we could document and help companies take advantage of this incentive. The FI Group is a very powerful organization out of Europe. It's been around for 20 years. It's the technology that they developed is second to none in the industry. We're in 13 countries. We got close to 40 offices, about 1,500 employees. They're scientists, they're tax people, they're attorneys. It's the relationships that they created with their clients are, oh my God, they're terrific. And it's very prevalent for the people attending the show the last few days. What I want to do is kind of explain what has taken place with startups. Startups defined by the government as a company 5 years old or less, $5 million in sales or less. They can get a tax credit that reduces their FICA tax, their payroll tax. The government has a program. Any company that has innovation or technology will qualify. And those activities are applied to the payroll taxes and eliminates it. I can go back 5 years. So it's what an incredible immediate benefit. Nothing else like it. The biggest expense I've seen for startups has been payroll taxes. Guess what? This eliminates it. And with the CARES Act in the United States, the CARES Act today, what it does is it doesn't eliminate it. It defers payroll taxes. This eliminates it. How's that? So what a terrific benefit. Activities that qualify. Any type of technology, any type of software. How about sales, the sales process? Any type of innovation. So every startup, guess what? Y'all qualify. If you make apps, if you make medical, what I've seen in the startup field, there's lots and lots of equity funding, and there's more startups than I've ever seen. Southern Florida is incredible. It's an aggressive area. Boy, if I could help this will be, a terrific opportunity to um, improve the value
Mhm.
of your company. If you want to sell it, if you want to build it, it's just terrific.
Bruce, we have a question regarding this, what you just said from Stan. Does it eliminate payroll taxes for engineers only or for everyone within the company?
Everyone.
Wow.
Everyone. It doesn't have to be engineering. Engineering is one of the components.
Great.
What I've seen, let me give you an illustration. A startup company, 2 years old, 3 years old, has 5 employees. They will get a minimum of $50,000 per year of credit, which eliminates their payroll taxes.
Amazing.
Um, that's amazing. You're right. Then the government says the maximum you can go up to $250,000. So, and you go back 5 years. I'm not very smart, but that's about $1.2 million, $1.25 million in benefit.
Yep.
So that's an incredible benefit. So it's exciting. Also, one of the things we do, as our team works closely with your CPA or your tax provider, because they have a trust and relationship. So what we do is we make sure that the benefit can be used. And if it can't be used, it carries forward up to 20 years. So we go back 3 years, or at least 3 years, depends on the situation. So, and what we do is we do an assessment, make sure they can benefit. It's really cool. So, any other questions?
So for no, just a recap from Stan. Yes, it's companies who are under 5 years and under $5 million. Absolutely.
Yep. And what we look for is for startup
Mhm.
companies, if you become profitable, the credit is applied to your income taxes.
Oh,
And states have it too. So most states, probably about 40 states in the country, have a similar, it goes hand in hand with the regular federal credit. So, and it's an immediate benefit because payroll taxes are paid quarterly.
mhm.
So taxes are due October 15th. So
That is
it's,
okay.
you do a review, you can get it done, you get the benefit within months. So that's incredible. So, and very seldom have I seen an audit. If it's audited, it's the law. So it's very minimum
Okay.
risk. So, and a misconception I hear is, we don't qualify because maybe we just do engineering. Engineering is one
Okay.
component. So, innovation and technology, those are the buzzwords.
All right.
Okay.
I see we just been joined by Jean-David Ganem, and I think he's one of our panelists as well. So if you want to click on share audio and video, you can join us in this conversation. Meanwhile, we'll tackle another question from Stan. What is your business model and how much is it to hire a company like yours? Interesting question.
Okay, what we do is the best way to do payroll study is, number one, let's take a look at your most recent tax return, your federal tax return. Number two, let's find out how many employees you have and what they do. Okay, kind of a roster. Okay. When I do that, I'll give it to our team. We'll do an assessment, give you a benefit range. Want to make sure that the benefit is viable. And if it's if it's $1 gajillion, guess what? We want to do it. And typically, how we engage is most of our clients like it on a performance or contingency basis. We get a percentage. If you don't benefit, I don't benefit. So no risk. If you're audited, we cover the audit.
Wow.
So it's a win-win situation. We developed in this COVID environment. We developed technology, so it's very transparent. We do Zoom meeting calls. The entire conversation is recorded, and the documentation is second to none. And who's doing it also is that we have engineers, we have tax people, we have legal people. So they're professionals. We understand your business model. So important. We build a relationship, the trust. So, and hand in hand, we're working with your CPA. So,
very good.
that answers your question?
Absolutely, yes, yes. Elena is asking where we can find more information. Well, Bruce, you do have a booth with us in the expo area, and you can also we can contact you directly. So maybe you want to share your email or website or phone number in the chat, Bruce.
Yeah.
And Florence is asking if this is applicable in every state. You mentioned 40 different states, right? That. Oh, perfect. Thank you, Rachel.
There we go.
Wonderful.
Okay. It's applicable not in all states. 40 states. I believe Florida does have a credit. I'm not positive. I know the most aggressive state is California. Next after that is Indiana.
Okay.
So, but it goes off the federal.
Right.
So it goes hand in hand. It has to do with technology, has to do with business processes, process improvement, testing, failure, IP. IP is, I work with a lot of IP attorneys because the trademarking, the patents, patent pending, guess what? That's all R&D. And guess what? The cost of the attorney is included as an expense. So I could use if you pay your attorney millions of dollars, you could use that as a.
They're going to increase their prices.
I know that. Oh. So that's why I work with a lot of
course,
patent attorneys. They're terrific. All their clients
qualify.
All
right. So. Cyril is asking, can we get a tax credit if the R&D is still abroad?
This is okay. We're talking right now about U.S. It has to be U.S. activity. Okay, it has to be, and it's U.S. employees. It's W-2, called W-2 Box 1 wages. Wages is the biggest driver of the R&D credit. And if I give you an example, if somebody makes $100,000, it's a 14% credit. So 14% credit on wages.
Yeah. That's
pretty generous. If your employees or if any of the development is overseas, you cannot use it. It has to be. The purpose is of the R&D, and the payroll credit is for business expansion.
Activity.
Okay, is to create jobs in the United States. And if you have it in Europe, you got France has terrific, Spain has terrific
incentives as well.
We have offices throughout the globe, so I could help you and make it very transparent everywhere.
Brilliant. And Stan's question, for older companies that are not eligible anymore, have you seen some subsidiary creation to put part of the team and benefit from the program?
Not sure if I totally understand that, but there's a lot of growth in the United States, maybe.
For older companies, is there any incentive or program that would qualify an older company that are not eligible to this specific tax credit?
For an older company, the R&D tax credit applies to taxable income of a company, and that has to do, and that will minimize or eliminate their tax liability. A company has the payroll tax credit. It goes against payroll taxes. The R&D tax credit goes against income taxes. It's the same program, but just applied differently.
So the question now I get the question as well. Thank you for clarifying, Cyril and Stan. Indeed, if an older company creates a new structure like a sister company, subsidiary, indeed, in the US, can you then hop on to that tax credit? Okay.
Yes, absolutely. Yeah. Because typically they'll have a separate federal ID number.
Oh yeah,
perhaps. Okay, and it becomes a startup.
A new FEAN, yeah.
Okay.
Okay.
Yep. And what we do is we'll analyze a
Mhm.
corporate structure, because if there's a division, it depends how they file their income taxes. I mean, there's called a control group, or we'll see where the R&D or the incentive is applied toward.
Okay.
So, yeah, there's some nuances, but we learn about the operations, and then advise accordingly. Work with the
Mhm.
CPA. So, something else that might be pretty prevalent is companies that are flow through or S corp or LLC. Those corporations, the credit flows through to the individual shareholders. So it gets a personal
Oh, wow.
benefit. So what it does, it lowers their personal income taxes. So maybe a corporate doesn't make
For the
money,
past
they're
years, yeah.
struggling, but it passes through, and so it's a benefit to lower their
Personal tax.
personal income taxes. And the government actually made some changes to make it simpler. The government did some things right, and I don't say that very often, but this is very, believe it or not, it's very non-political. It's approved by, it's permanent, and it's approved by both parties this week.
Oh, right.
It's subject to change because we don't know.
That's quite refreshing these days.
Yeah, it's amazing. It's been around for 30 years, or it's been around since 1981. The purpose of the credit, the incentive is keep jobs in the
Correct.
United
Yes.
States.
All right.
It's to promote innovation, technology, anything
And
customized,
just to,
any existing process.
right. Okay. So innovation and technology. That's really that's where it applies. The industry it applies.
Yeah. Software.
Yeah.
Software. It could be that's a company that has salespeople that does a technical sale. Guess what?
Okay.
It qualifies. If you do engineering, if you do design work, guess what? It qualifies. If you have specialized tooling or prototypes, guess what? It qualifies. So it goes on.
It's really yeah.
It's very generous.
Best is really to give it a try and contact you and see and just explore with you.
Absolutely, yeah. Another point is it's been around for a while. A lot of companies that I hear say, "Well, we don't qualify because we don't watch things explode. It's not very scientific." It doesn't matter. The government changed the definition. Okay, so if a company has done it in the past, please look at it again, because it entirely has changed, and you got to stay competitive, especially in this environment. If you can't use the credit, guess what? If rolls, you got 20 years to use
20 years. Wow. Okay. That's
yeah. So hopefully a company is going to be very successful by then. If a business is for sale, it's an asset. It goes with the
that's
business.
Extremely valuable.
So it is an asset. Okay. If you haven't used the credit, you want to go back, you go back 3 years. If you have losses, you can go back to the beginning of time. So, and what we do is we help document it. Okay, we have a software program that helps document the whole entire process. So it's in the event of examination.
Very transparent and very solid to show proof.
Yeah. We don't have any audits. Yeah, audits are a non-issue. So.
Well, it's very very frictionless process.
Yeah. So it's a lot of in Florida. It's with all the technology coming into the region. This is very beneficial. It's a tool that you got to take advantage of. A lot of companies just aren't aware of it. Don't know why, but it's a misconception.
Yeah.
That's why. So it's
lack of awareness, or if there's awareness, then lack of misconception about the
Yeah. And the FI group is very powerful. We've created tools globally. It's second to none. I've been in the industry a long time, and the tools and the people, the technology, the scientists, the engineers that we have as a team is incredible, and we understand business operations, so we know how to apply the incentive to take full advantage. It's creating a best practice.
Right.
I think that's what I'm saying. Yeah.
So just to sum it, there's a massive tax refund, and that you can use right now and for the next 20 years. So I mean, it's a great.
And startups, yeah. I'm focus on startups because it's startups struggle to with expenses. Oh my gosh, this is the biggest, might be one of the biggest expenses that they have. So, and with some of our other studies, we've done a study that had 10 employees. They got $150,000 immediately. And all of a sudden,
it's applied only to American employees, or is it also any foreign employee in America with a work visa or a specific, like an O1 visa, or for specific abilities that?
It's what the criteria is. It's if they
okay.
get
Yes, as soon as you're on the payroll on W
in the United States, it doesn't matter where they're
right.
out of from the,
because they are
all of our of our clients are international, and the credits apply to the states. So.
Excellent.
Yeah.
Oh, just to remind everybody that you do have a booth in the expo area, and you're here to connect and explain in more details and really see a very specific situation, as it is quite broad, as you said, the parameter of this law, tax law. So
yeah, I tried to give you a high level, and I'd be very specific on anybody who is interested in, has a ABC company, and tell me what their situation is. And if they have companies in other countries, what we do is we have a huge team that help in France,
perfect.
Spain, Germany, Italy, Brazil. We're in Latin America, so it's it's consistency of a service. So it's pretty unique. So and I work with CPAs very closely. So
are CPAs quite aware of this usually, or it's not really their core work?
I would think most CPAs are aware, but it's a field of where expertise. We have the operational and the technical.
It's a niche,
differentiator. I mean, it's not compliant. I mean, I guess anybody could do the compliance. What we do is we have an engineer talking to an engineer. Okay, I can't do engineering. Or a software developer talking to a software developer. Okay, or a scientist, or whatever the field. They could talk the talk, and if one engineer asks another engineer,
they would, of course,
they'll talk forever. I'll bore them to death. So, So, but by extracting that information, it really builds the benefit.
Very
incredible. Good. Okay, and then we just comply it to the tax law,
and the magic happened. Very good. Well, Bruce, thank you very much for your time. I do invite you all watching now to contact Bruce immediately on the booth in the expo area, which is on the left-hand side, or you go in the top right corner and people like Bruce Kletsky, and you will find Bruce contact. Ask for a video call or LinkedIn, or just get in touch. You also have his email right here, bruce.kletsky@fi-group.com. Don't hesitate.
Yep. Yeah, and the same thing applies also for Europe,
Wherever
South
we are,
America.
basically. Yes. Yeah.
Companies I could, yeah, and it's there's variations, but it's very powerful, and we have oh my God, the talented team we have is
Amazing.
it's pretty neat to watch.
And there's a lot of passion behind it, because it's such a relief for startups. It's you're really addressing a pain point that's very empowering to relieve.
What I've also seen is, there's a lot of equity funding available, and the startup community is, oh my gosh, grown tenfold, especially now. I mean, the medical field, the food, apps, software, I mean, you name it, bio. It's
fabulous. There's Michael asking when is the best moment to connect with you? Before creating, during the first year? When? I'll let you answer, but really you can go back a couple of years, which is great. So
yeah, you can do it. What I would do is I would do it immediately, and what we'll do is we'll learn about your situation, and then we'll come up with a game plan what the best timing is. If companies that are just brand new, maybe have 1 employee or 2 employees, maybe it's a little early, but that's okay. I'll make you aware. If you've been around for a couple of years, have 5 employees or whatever, I would jump on it right now, because you get an immediate benefit.
Of course, yeah.
Don't wait.
It's either you get the benefit now, or you get a very big check in a couple of years. So
yeah, so it's but every situation's different. So what we'll do is we'll find out. It's a fact pattern. Yeah.
Perfect. I really strongly suggest you contact Bruce, and you assess every different situation and really take it from there. Hi, Chantal. Thank you for joining. Do contact Bruce, and thank you so much for sharing this insight, because it's extremely helpful for startups to really save on a really big chunk of money. We're not talking about cents and a couple of dollars. No, it's massive. Yeah. Oh yes.
Right.
So thank you very much. Join Bruce on his booth, or people direct video chat with him. Thank you.